Okay, so let's unpack this. There's this quiet revolution happening in 2025. It could really redefine money as we know it. We're talking about central bank digital currencies, right? CBDCs.
Yeah, exactly. And what's fascinating, I think, is just the sheer global acceleration we're seeing.
Acceleration. How so?
Well, think about it. We're now looking at over 137 countries. That's, 98% of global GDP, all exploring CBDCs in some form.
Wow.
And that's a huge leap. I mean, just back in 2020, it was maybe 35 countries.
Okay, so fundamentally, what are they?
At their core, they're basically digital versions of a country's normal fiat money, like a digital dollar or digital euro, issued and backed by the central bank. That's the key part.
Right, so not like Bitcoin or Ethereum.
Exactly. Those run on decentralized networks, blockchain usually. CBDCs are by design centralized. The central bank is in control.
Okay, so the big question then is, what does all this actually mean for you for your digital assets? Today, we really want to do a deep dive into sort of the three major players shaping this landscape. China's e-CNY, which is pretty far along. Then the very unique situation with the U.S. digital dollar, or a lack thereof. And also the European Central Bank's digital euro project.
Three very different approaches.
Totally. And we want to explore why 2025 feels like such a tipping point and how all this stuff is, creating competition, but maybe also acting as a catalyst for the wider crypto market.
Yeah, catalyst is an interesting angle.
So let's start with China's e-CNY. It's the biggest pilot, the most advanced, right?
Yeah.
How's that actually playing out in daily life over there?
Oh, it's really becoming integrated. Massively so. We're talking cumulative transactions hitting, over 7.3 trillion yuan by June 2025.
Trillion. Wow.
For everything.
Yeah.
Salaries, paying for the bus, groceries. They're even pushing for, international use cases.
Okay. But does that massive scale, that integration, have any sort of unexpected side effects?
Well, yeah, there's an interesting ripple. Because it's so centralized, so trackable, we're seeing signs that some Chinese investors are actually turning to Bitcoin.
Bitcoin. Why?
Specifically OTC Bitcoin buying.
Huh.
Over the counter, like direct peer-to-peer trades. It seems to be a kind of privacy hedge, especially after April 2025, when there were signals about, potentially greater state control over money flows.
Huh. That's fascinating. So the efficiency and the control of the e-CNY might actually be pushing some people towards assets like Bitcoin precisely because they're permissionless. No central gatekeeper.
Precisely. It really highlights that fundamental divide, doesn't it, between state-backed digital cash and, censorship-resistant assets.
Right. Okay. So from China's full steam ahead approach, let's jump across the Pacific. The U.S., it sounds like a completely different story, almost a U-turn.
Yeah, it's quite the contrast. There's been a really significant political shift. Back in January 2025, President Trump issued an executive order, and it explicitly banned the Federal Reserve from even pursuing a retail CBDC.
Banned it. Not just paused, but banned.
Banned development, yeah. Citing privacy concerns, mainly. This makes the U.S. pretty much the only major economy to formally, prohibit its central bank from even experimenting at this point.
Then there's legislation too, right?
Things like the Anti-CBDC Surveillance State Act, it all kind of reinforces this direction. Domestically, the U.S. focus seems to be more on, say, regulating existing crypto and maybe supporting private sector stablecoins.
So, okay, what does that mean for you listening? If there's no official digital dollar, does that paradoxically perhaps give crypto more breathing room in the U.S.?
Well, it certainly seems that way, but potentially creates more space for, existing stablecoins, maybe other cryptos used for payments.
Does this sort of cement the value proposition of Bitcoin or Ethereum, as these non-state, potentially more private alternatives?
That's the argument many are making, yeah. Rejecting a traceable government digital dollar could, indirectly, bolster the case for decentralized options. For now, U.S. policy seems, more favorable to the existing crypto market than trying to replace parts of it.
Okay, fascinating. So China's pushing hard, the U.S. is actively hitting the brakes. What about Europe? How are they navigating this? Let's look at the digital euro.
Europe's taking maybe a more measured approach. The digital euro project is definitely in an advanced preparation phase.
Preparation phase, so no rollout yet?
Not yet. A decision on whether to actually launch might come late 2025, maybe 2026.
Right.
Right now, the ECB is drafting a detailed rulebook. They're prototyping with banks, payment companies.
And what are they emphasizing?
Privacy seems to be a really big theme. And also the idea that it should be complementary to cash, not a replacement. Their July 2025 progress report talked a lot about successful testing, but also ongoing debates, especially around privacy features.
That complementary privacy-conscious angle feels like a key difference from, say, China's model.
Definitely.
So it sounds like the digital euro isn't designed to, like, kill crypto, but maybe coexist. Could it even, I don't know, normalize digital wallets generally, making people more comfortable?
That's a possibility. If you zoom out a bit, Europe seems to be trying to build this, comprehensive framework. They're rolling out micro-regulations for crypto assets while also developing this potential digital euro. It suggests they see a future where both regulated crypto and a CBDC can exist side by side.
Finding that balance between innovation, regulation, privacy.
Exactly. It's a tricky balance, but it does imply maybe less direct competition for something like Bitcoin as a store of value or Ethereum's role in DeFi.
Okay, so let's try and pull these different threads together. We've looked at three really distinct paths, haven't we? China forging ahead with the e-CNY, huge volumes, but also sparking this counter trend towards OTC Bitcoin for privacy among some. Then the U.S. really hitting the brakes on a federal digital dollar, which might weirdly be good news for crypto domestically.
Right, creating a different kind of environment.
And Europe, carefully, maybe slowly, crafting its digital euro, really focus on privacy, being complementary to cash.
Yeah, three different strategies, really reflecting different priorities.
So connecting this to the bigger picture, does the rise of CBDCs mean, like, the end is nigh for Bitcoin or Ethereum?
I really don't think so. They won't necessarily spell the end for decentralized crypto. Why? Because Bitcoin, Ethereum, they offer genuinely different things.
Like what?
Well, censorship resistance, for one. Their role as a potential store of value, like digital gold for Bitcoin, or the backbone for decentralized finance, DeFi for Ethereum. Centralized CBDCs just don't fill those niches. In fact, you could argue, and we saw hints of this with the OTC buying in China, that for some people, the very idea of a state-controlled, potentially surveilled CBDC only reinforces the appeal of decentralized alternatives.
Right. So this brings us to the really important question for you listening. How do you actually navigate this? This landscape is changing fast.
It really is.
It seems like the most likely outcome isn't one replacing the other, but coexistence. Maybe CBDCs for everyday, efficient payments, and crypto holding its niche for investment, maybe DeFi, maybe that privacy-focused asset.
That seems plausible, a sort of specialization.
So to position yourself strategically, maybe think about your exposure to genuinely decentralized assets, especially if state oversight of digital money is a concern for you. But also recognize the growing utility, perhaps, of regulated stablecoins and maybe even CBDCs for just normal, everyday transactions down the line.
It's about understanding the different roles they might play.
Exactly. The key probably isn't picking sides like it's a battle, but understanding where each type of digital money might excel. That way, you can make informed decisions to, safeguard your own financial future in this evolving world.